welcome back to my channel. If this is not your first time here, then you know that last week we spoke about practical investing and we used the Maslow's hierarchy of needs as our guide. But if you're new here, then don't worry, you can always go back to that video and watch. But basically today, I want us to tackle the first, or rather the bottom of that pyramid, because I had said that remember what you invest in is informed by the needs that you have at the particular time in your life, right? So today, I want us to cover the psychological needs and the safety needs. And so basically in today's video, we are going to focus on money markets and especially and fixed income funds. Okay? Karibu sana. So maybe you've just been hearing about money markets and you do not even understand what they are. So today, let's go back to the basics. So what is a money market? A money market basically is an investment fund that pulls funds from a pool of investors, and then it takes that money and invests it in low risk securities such as the treasury bills, the call deposit accounts, and the corporate, should I say, short-term calls. Yeah. So basically, if you take your money today and put it in a money market fund, that money, like 60 or 70% of it, goes to treasury bills. This is whereby that fund manager will buy securities from the government and then they'll earn an interest. Okay. What is the beauty of money market funds? One, they are very liquid. Okay. Very liquid, that means that if you withdraw your money today, some will even allow you to get your money today, but for others, you have to wait 24 to 72 hours. But nonetheless, they are a very liquid form of investment, okay? And why do we always say the money markets will never go out of, should I say, market, or you can never get rid of them? It's because especially if at the level of your life, you're more concerned about basic needs, that is rent, school fees, and other short-term needs that you may need to pay for in the foreseeable future, then instead of putting your money in your pockets, or in a carton. I remember at the end of last year, I was on TikTok and I was seeing people taking out their teens where they had kept their money. Some had saved 70K, some had saved 60K, which is beautiful because first of all, that shows that they have discipline. But remember, if the rate of inflation was 5% and then you just took your money and put it in that container of yours, your money has been eaten away by inflation. And see, what we're trying to do is, remember, if you're putting your money in a money market fund, really you're not after returns, but you're looking at preserving your capital from inflation. Okay? So basically, that is what money market funds are. They are a pool, they are an investment pool that will get funds from different investors and then take those funds and invest them in a low risk securities, mostly treasury bills and call deposit accounts or short-term corporate papers. Okay, that is when they lend to companies in the short term. Okay, so how exactly do you know which money market is good for you? First of all, most, if not all, money markets are regulated by the Capital Markets Authority. And so this is to mean that they cannot take your funds and use them for, unscrupulous things or dealings that you do not understand. Okay? So one thing you need to ensure is if whatever you're investing in is calling itself a money market fund, you need to ensure that it is registered with the Capital Markets Authority. Okay? Then you also need to check who is the trustee, because this is basically how it works. Let's say, for example, let me use an example of a bank. Like I personally bank with Stanchart. If you take money and put it in the Stanchart money market fund, the Stanchart is the fund manager. They're the ones who will decide where will we take your money, okay? But then you also need to, for any money market fund, it needs to have a trustee. This is the person who will ensure, or rather a bank, which is another bank, which could be like a tier one bank, that will ensure in the event that the fund manager is no longer able to give you back your money, you don't lose all your money. Okay. And this is why they tend to be like very safe forms of investment. All right. So you need to check who is their trustee, who is their custodian, for how long have they been in the market. First of all, when it comes to money markets, really you can't say that past performance will influence current performance. So really what you should be checking at is whether they are regulated, who their trustee is, and who their custodian is. So that in the event, which is very unlikely, in the event that your fund manager goes down, then you don't end up losing all your money. Okay? So again, back to basics. We've explained what money markets are, and two, what is it that they trace? So basically, money market funds, they trace interest rates. And that is to mean, if the interest rates go down, then the rate of return for your money market goes down. Okay? So let's do economics 101. Okay? Whenever the government wants, for example, to make it easier for people to borrow or to increase the amount of cash flow in the economy so that people are able to spend, what they do is to decrease the interest rates. Yeah. So the CBK will reduce the interest rates, and that's when you can find, like, for example, getting a loan from the bank becomes very easy. But then, because remember, these money market funds usually trace the way the rates are performing. So if a rate goes down, then that means that your rate of return goes down. But that is not to take away from the fact that they will always help you to beat the rate of inflation. Okay? So basically that is what money market funds are. And so if you're looking to get into money markets, let's assume you're even a first timer when it comes to investing, or basically you want to set aside a sinking fund. A sinking fund, I'll say again, is whereby you put aside money for a particular purpose. Like, say you're a parent, okay? And come April, you'll be required to pay fee. You don't need to wait until April comes, then you start struggling to get money for fees, okay? You can already start setting aside that money. And which is the safest place to put your money that, one, will beat inflation, two, is highly liquid. That means that you can get it as soon as you want it. A money market fund will be a good place to start, okay? So there are a couple of funds that I'll mention that are performing really well in 2025 that you should consider. But always remember, when it comes to a sinking fund, you should split your monies so that, for example, if you decide to go with the Cyton Money Market Fund, you can decide, for my Cyton Money Market Fund, I'm going to put my school fees. And then for my Etika Money Market Fund, I'm probably going to put in my rent. For my Gulf Africa or Lofty Carbon, I'm going to put in my holiday fund, So basically, when it comes to, you can easily incorporate your money market funds with your sinking funds, okay? All right. So I want to show us a couple of funds that performed really well towards the end of last year that I think you might consider. That will help us, because remember we said at the beginning of this year is that we are trying our best to build our emergency funds so that in the event anything happens, God forbid, of course we live by faith and we hope for the best, but you cannot predict the future, So we want to ensure that we have built our emergency funds to ensure that they can last us between 7 to 9 months should we not have our income, okay? So some of the money market funds that performed really well, allow me to refer, but I'm going to put in a screenshot here so that you can see. Number one was the Cyton Money Market Fund that had a net return of between 13 to 17%. What do I mean when I talk of net returns? First of all, when you put your money in a money market fund, one, most money market funds will charge what we call a management fee, which ranges somewhere between 1.5% to 2% of the money that you have invested, okay? So that is one of the charges that you incur. Charge number two is when you get interest, which of course is credited to your account on a daily basis. That interest is subject to withholding tax. In Kenya, the rate of withholding tax is 5%. So that means, let's say, for example, for ease of calculation, get into a money market fund and it tells you that the rate is 12% per annum. That is to mean that the rate on a monthly basis is 1%, okay? So let me not use daily because that's a lot of calculations. So if, say, for example, you had invested 1,000 bob. Okay, 1% of 1,000 bob is what? You get 1%. Okay. What? So let's assume you had even put in 1,000 bob. Okay. So 1,000 bob in a month will earn you 10 bob, right? But remember, there is withholding tax. So when the government takes away their 5%, what will actually be credited to your account is 9.5%. All right. So always remember, if a money market fund tells you that they're going to give you 16%, that is usually not considering withholding tax. But remember, whenever you get interest income, the government will charge withholding tax at 5%, which is okay. I mean, give to Caesar what belongs to Caesar, okay? So what will be credited into your account is 9.5 bob, okay? And then this is the thing. When a fund tells you, like, for example, they're going to give you 17%, they've already considered their 2% of the management fee, so you don't have to worry about that, okay? So, like I was saying, some of the best performing money market funds last year were number one, Saiton, which gave a net return. By net, now I mean after management fees, was 17%, okay? And you see, the beauty of this is that the minimum investment is 1,000 bob. They do have an app, and even if you're not using a smartphone, they do have a USSD code that you can use to invest. Okay, so this is one of the money market funds that I would recommend. I do not work for them. I have not been paid by them. This is completely out of the research that I have done. So disclaimer, this is completely out of research. Make sure that you do your own research before you settle on something, okay? So Saiton Money Market Fund was one of the funds that performed really well. Its minimum investment was 1,000 bob. And then they do have an app, so you don't need to be walking around with papers. I mean, who wants to be walking around with papers right now? Even money, nowadays we use mobile money or cards, right? The other fund that performed really well was the Etika Money Market Fund, whose net return ranged somewhere between 12 and 16%, okay? They also have an app, so I mean, you also don't need to struggle. So long as you have a smartphone, you can download their app, upload the KYC documents, which is basically your ID, your KRA PIN, sometimes next of kin. If you're going to be topping up using your bank, they're going to ask for a bank statement, but there is also an option of topping up from your M-Pesa. So that is another one that you can consider. We have the Kuza Money Market Fund. It also has an app. It also did really well because it averaged somewhere between 11 and 15%. It has an app, so that means that you don't need to struggle. I mean, first of all, we're looking for convenience. Sorry, as far as I'm concerned, when you're talking of money markets, first of all, we're looking for convenience. You don't want to be struggling with papers and maybe you want to put in your 100 bob there, 1,000 bob, you know. You're also looking for ease of withdrawal, so you can easily withdraw your money when you need it. All the ones that I've mentioned, you can withdraw. When you withdraw, it takes somewhere between one day and 3 days. 3 days is like on the higher side, so you can easily get your money. We have others such as the Gulf Market and the Lofty Carbon. All these had somewhere between 12 and 16%. We also have the Ndovu Money Market app. So basically, I'm just listing a few that, first of all, have an online presence, so you can easily top up your money. Using the app or using your phone, you don't need a lot of paperwork, and also there is ease of withdrawal. For the ones that I've mentioned above, if you withdraw your money, there are no penalties, okay? So if you're looking to grow your emergency fund, let's say, for example, you can decide, I'm going to put in my emergency funds in the Saiton Money Markets Fund, okay? Like, this is money that I'll just put there and not take out, not unless an emergency actually arises, okay? And then maybe you're thinking of a sinking fund for school fees, okay? You can decide, so for school fees, I'm going to put my money in the Etika Money Market Fund, okay? Let's say, for example, you want to go on holiday come December. So you can decide, so for my holiday, I can put my money in the Kuza Money Market Fund. And then let us even assume you're not all about good vibes and inshallah, okay? Maybe you want to start investing in special funds. And you know, for special funds, therefore a specific category of people, like the one that you can invest in with the least amount of money is the Kuza who's a momentum, where the minimum investment is 100K. Okay. So if maybe you're just looking to grow your money so that you can actually invest in a particular category of investments that you are interested in but do not have the money for right now, you can even decide to use your money market for that. So maybe you can go with Ndovu or you can go with Avocap. So basically, I just want to say, when you're putting your money in a money market fund, number one, we are not really chasing returns. Money markets will not make you rich. Okay? So this is somewhere where you just put your money, one, for emergencies, okay? Two, to beat inflation. And three, to grow. Maybe you want to grow your fund for prospective purposes. Like, remember when they floated the Safaricom bond? Like, no one ever tells you that there's a bond, not unless you're an insider. There is a bond that is going to be floated at a particular time. Even the Kenya government bonds, you don't even know when they're going to be floated. You just wake up today and you hear that the CBK has floated an infrastructure bond. Maybe it's 12 years with a rate of 18%. So you need to have money aside, which is you can easily access, for prospective purposes, so that when such opportunities arise, then you have money that you can quickly take out and invest in that other thing. Okay? Great. So I hope we've understood money market funds, what they are used for, and understood that one, they're not going to make us rich. Two, there is a withholding tax element, so that I think there's a portal where I saw people saying, oh, these people are liars. They told us they're going to give this and they didn't give us that. No, they are not liars. The thing is, first of all, interest rates keep changing because we said the money market funds trace interest rates. And number two, there is a withholding tax element and also management fees element. Okay?